everybody. Welcome to the TraderMerlin Show. It is your Hump Day Wednesday. Hope you got a good trading session out there. If you were in Bitcoin or crude oil, heck of a day. We'll look at those Bitcoin charts, the crude oil charts, and a lot of charts today, actually spurring today's show from listener questions. Of course, if anybody is new to the show, which most of you are regulars as I can see, you can click that subscribe button. That'll let you know when we do the show live every day, Monday through Friday. And of course, if you like the show at some point, give me a thumbs up. Hello, Les, Boss, Poopa. We got Kenny, Shinobi, Eric, Walter, Sue, Siraj, Tom, Katut, Thomasina. Jerry, good to see you guys all today. And we're all across the board. I got Boston, San Jose, UK, and, of course, Indonesia with Katut. So good to have you with us. Here is what we're going to talk about today. And, of course, I will deviate from this and go down whatever path you guys want. But I thought this was kind of an interesting question that came in from a viewer. And it's really about trading media recommendations. So Scott sent in this and said, I found this article on Yahoo interesting. What are their thoughts on buying these companies? And this is from Scott. So Scott, thank you. I will post in the chat just so you guys can have it as a reference, because I think I'm the only one who's allowed to post links into chat. But this is where the article is from. Yes, Boss Poopa, it is a formal shirt. Basically, I was in studio again today, recording some cryptocurrency lessons, and I wear undershirts. So basically, you guys are using straight undershirt. Plus, it's so hot in California right now. So yes. Thanks for calling me out on that one, boss. All right, so with regards to trading investor or media recommendations, I think everybody here and anybody who's watching this should understand right away that there is always an ulterior motive. There is always something behind that person telling you about those positions, which is one of the reasons I generally don't like to say the positions that I'm in when I'm on the show. I have no problem talking about past trades that are done. But I almost feel guilty because I call out institutions, I call out banks, I call out financial firms simply because I believe that anytime they issue an upgrade, a downgrade, a review, any write-up on a company, they're basically trying to push the retail investor one direction or the other, whether that's to buy it or to sell it or whatever. And there's usually a financial ulterior motive behind the scenes. So I'm not a fan of it. I think that anytime someone tells you to buy something or sell something, whether it's Goldman Sachs or your brother Larry, they're most likely trying to get you to buy into something. So, for example, if I told you guys right now that I had bought a long position in the equity markets. Let's say I went long, I don't know, SPY. I'm not right now. I'm actually short. If I went long on SPY, then you guys would be like, oh, well, Merlin's long. I'm going to have to jump in long as well. And, of course, by me telling you that, yes, it does help my position because if you guys are going to buy into it, this adds to my trade. But I don't know. I feel like that's almost deceptive, which is why when I am making trades or talking about something that I own or am in, then I will let you guys know if I'm in it or not. So I try to be full transparent. Yeah, Shinobi or Jim Cramer. I mean, Jim Cramer is the classic one. And again, if you just go to Google and type in Jim Cramer manipulation, it explains very clearly why you should never trust these people. And it's not just that you shouldn't trust people like Jim Cramer. He's probably a really nice guy. He just has very heavy entrenched connections in Wall Street who are feeding him information to get him to talk about it on his show. He even talked about it when he was a hedge fund manager. He would feed out a lot of fake, total BS information to the news agencies, to the media sites like Wall Street Journal. He even calls him the bozo from the Wall Street Journal who doesn't know what he's talking about. You feed him some bogus story, and this guy would just be all over like, oh, I got first scoop. I'm going to be first to market with this story because Jim Cramer's fund told me about it. And it's not just Jim Cramer, it's the entire industry. From top to bottom, it's usurious people trying to get you to buy or sell whatever they're pushing. When I was in college, I think I told you guys this story, I ran a financial management organization. So basically just a bunch of us kids, sitting in a room at lunchtime and, once a month, or I think it was once a month, maybe once every couple of weeks. And we would find people in the industry that we're in the finance space because we were all going for our finance degree. So we tried to bring them all in and say, what's your career like? What does your job look like? So me as a finance student, I can say, hey, that's something that sounds interesting to me or not. And we had CEOs and all sorts of prominent financial people. The one that stands in my mind more than anything was a trader for Bank of America. And again, I think I told you the story, but he walked in with his keys to his Ferrari, throws them on his desk. He's got these, Armani suits and Prada shoes and just blinged out. You're like, man, this guy's a baller, right? He's looking sharp. He's boasting about his cars. And he says, guys, I'm making so much money, I don't even know what to do with myself. And he was in his probably late 20s, maybe early 30s. And we're like, well, what do you do? And he's like, I'm a stockbroker. I work for Bank of America. And we're like, okay, great. And he says, look, here's what I do. Basically, I'll go into the office early in the morning, 5 a.m., and we sit down, have a meeting, and they basically pass around a sheet of all the things that we're supposed to pitch that day to our customers. So he just calls his database, and that sheet would have a written out paragraph that said something like Dell stock, right? And it have maybe had like a palm tree next to it, right? It'd say Dell stock, and then down below would be the full talk track that they're literally reading to the customer, which was like, hello, Mr. Rothfeld. This is Bob with Bank of America Securities. You have an account with us. We think Dell is a great company. It's got great earnings, great prospects, blah, blah, blah. And they're just going on and on and on and on and on about why the customer should buy Dell. Well, where are they getting that Dell from? It's because Bank of America wanted to sell their Dell, and we're getting out of this position, which is a huge conflict of interest in my opinion. Not only that, but that salesperson was being incentivized by the palm tree next to the word Dell, which would basically said if he sold over 10,000 shares of Dell to a customer, he would get a trip to Hawaii. Does this really seem like you should trust the information coming from anybody who's calling you on the phone or writing an article? I don't think so. So let me go into this article a little bit. I'm not going to actually go into the article, but I'm going to show you the picks, the recommendations. These were the companies, and it said, kind of funny, it said, these are the top 6 stocks. I don't think I can actually show the article on Google because they might shut me down. But the headline of the article, and they might block it, says, it's from Investors Business Daily. It says, buy the dip. Investors pile into these 6 stocks for fast gains. Okay, I'm not sure if anybody here can count, but if you look at that screen, 1, 2, 3, 4, 5, 6, 7. Interesting. So they can't even count at the writer of this, Matt Krantz, messed up on that one. Anyway, basically they're talking about how far away these securities are from their moving averages. And you can see here that on Monday, this is how far away these stocks were from the 50-period moving average. And then on Tuesday, actually this was, I believe, as of this morning, the 21st, as of this morning, this is how far away they were. So no surprise there, because it was a huge bounce yesterday, and we got some follow through out there today. I mean, S&P's up almost another 1%, so great follow through. Same thing for the NASDAQ. You have just a beautiful 2-day rally. The real champion here, I guess, from percentage move is going to be the Russell 2000. So just so I can answer Scott's question, if you're ever in a situation where you're like, hey, I should buy these companies because so-and-so told me to buy them, stop immediately. You should just immediately go and look at, you had one job, Matt. You had one job. Yeah. Immediately just go and bring up those price charts. So I will go down the list here. I'm going to look at 7 of them, and you guys tell me yes or no that you should be buying. I mean, they're making it sound like you should rush into these, run into them. Now, I don't know what Matt's agenda is or if he has some incentivization to promote these companies, but bottom line is we should just look at the price chart. So let's see. Let's start with Dover, D-O-V. Dover's had the biggest bounce off of that. I mean, phenomenal. This article was written today. So yes, there was a huge move in Dover, but does anybody feel like they should be buying Dover right now? I mean, this is, to me, it's terrible. You should not be jumping on Dover right now. I mean, granted, Dover may be a great company. They may be poised for much higher gains, but you're up from 150 to about 165 in a period of 3 days. I just think that that's probably a bit of a stretch. Look at the volume. Again, this has probably been pumped by other industry pundits. Maybe it was this article that helped push things up. But there's clearly a pump and a dump coming. And to me, this article is probably that dump at the end where they're getting that retail investor to buy Dover, and this thing's going to come rolling over. You have a little shooting star today as well. Let's do this. I will see if I can revisit this list tomorrow. But there you go. 163.30 is where its low of the day was. Actually, slightly lower than that, isn't it? Just to that tip there. 163.22. So we'll keep an eye on that one. Actually looks like potential reversal, in my opinion. You have climactic volume, and you have a huge spike up. Boy, be ready for a reversal on this one. So according to this article, the gentleman sent me the name, Scott, I wouldn't be buying Dover right now. No. How about PTC? Okay, I actually like PTC. Now, the only reason I like PTC is, you guys, if you step back and look at that big picture, can you see the ascending triangle here on PTC? I don't know what they do. I know they're in information technologies, but as far as the actual business, don't know, don't particularly care. I do like it because it is hitting its head up against this, call it 148 mark, but these lows are getting higher and higher. So even though it's had a pretty strong 2-day rally, I like this one way more than I like that Dover chart setup we just saw. All right, what about TDY? T to the D to the Y. Not bad. The problem with it is if you're buying it, you're chasing it, right? These things have all already had a nice move. On Monday, Teledyne, it says that it was 0.4% below its 50-period moving average. Trust but verify, my friends. Let's go bring up moving averages. Yep, so it was below the red is the 20 and the blue is the 50. So it was just below its lower Bollinger Band. So if you guys are using that filter that I like to use, which is Bollinger Band %B, you would have been alerted to this because it would have been way outside, would have been outside that lower Bollinger Band, and as a potential opportunity, it came down into an area of demand. I actually would have liked this one here, right? Unfortunately, I got so many things I'm looking at, I didn't make this trade. What else do we have? So that was Teledyne, which is industrials. Now we're moving to financials. So you've had phenomenal earnings, but will that trend continue? All right. I like this one. And again, the article came out today. I agree with you, Batista. Where was he yesterday? I love it when people are saying, hey, this thing's outside of its lower Bollinger Band. That's unfortunately not into an area of demand. If this was into an area of demand, I'd be more interested because this is a beautiful trend. American Express looks fantastic. I mean, there's no weakness. These two moving averages you guys see here, the red and the blue, which is the 20 in red, blue is 50, they're almost parallel. Like there's no real slowdown of this strength, certainly over the last 3 months. So I love that one. I like this one from a long perspective. It's just, the longer in the tooth you get, the more these things run, the more likely there's going to be a correction at some point. But right now, it's just not happening. So ride the trend to the upside, big time. So I like American Express. Buying right now makes me a little bit nervous because you're at all-time highs, right? You're peaking right there. Dover had good volume. Yeah, well, Dover definitely had good volume. But to me, that's climactic volume. If you remember the show I did a few months back, it might even be a year ago. I don't even remember when I do these shows anymore. I did one on trading with volume. And this is one where you have huge volume, like the biggest spike of volume happened on a shooting star. That's one where you just go, yes, this is serving. Like Dover to me for tomorrow could be a great short. If we open up above 163, 163.22, if we open up above that and then start to drift down below that one, I will be short on that tomorrow. I'll hopefully be boasting about it. No, I don't like to boast, but I'll probably be talking about it tomorrow if I get up that early. 6:30 is not my favorite time, but I've been doing it lately. Yeah, I like this one because that climactic volume as well, Steven. I think that's a big piece for me. Now, you see, where was it? PTC and Dover look like good shorts to me. Yes, Walter, I think definitely Dover. PTC is not a bad short because you're in supply right now and you're coming up to another level of supply that's slightly higher. But I do like the overall longer-term pattern. This is an ascending triangle. It just feels like it's building strength. It's very low on volume, so not too happy with the volume. Hey, Lisa and Laurie, good to have you guys with us. Oh, Brendan's with us. Good. Break out the bulldozers, huh, Shinobi? Oh, man. It's going to be on my tombstone. We'll put that one on there. All right, so we had American Express. That was down below its lower Bollinger Band and popped back up. You look at Morgan Stanley, which, of course, should follow rather closely to that American Express chart. Again, very strong. You broke out to all-time highs. So today, actually, if you're playing a breakout trade, you had it. But look at the volume at the bottom. When you have a breakout with slightly elevated volume, granted, it's good. You want to see increasing volume. But I like what I see with Dover better, which is the huge volume spike. I love climactic volume. It just makes me feel like Gollum, and I should rub my hands and be going, my precious. All right, enough of my theatrics. IDEX is the other one. Let's go IEX. So it's IDEX is the company, but IEX is the ticker symbol. Out of the three we looked at, or four we looked at so far, I'm not that big on this one. Actually, we looked at more than four. But I'm not really that big on this one. Why? Because it's spent 2 months just traversing sideways. Look what it did back here in November, December, January, February. It also traversed sideways and didn't do too much. I like this one the least of the bunch. And then lastly, you had Realty Income, which of course is real estate. This, again, looks like a shorting opportunity for me. You have a shooting star formation. It has decent volume, so it trades on average about 3.5 million. You have this shooting star formation that happened on lower than average volume, which means people were just not interested in the move up today. So not bad. I see a couple different shorting opportunities here for tomorrow, which are going to be below on Realty income below 70.14, and I actually do like the DOV, Dover Shooting Star, below 163, and PTC will have to wait on. But I think it's interesting when you look at the headline that is basically sensationalizing this and saying, guys, buy the dip investors. They're piling into the stocks for fast gains, right? It feels like it's creating this illusion that, oh, if you just pile into these stocks on pullbacks, you're going to have fast gains. And granted, they did move a lot. But for me personally, I got to think more long term. I'm going to fall in one of two camps. I'm going to fall into that long-term investor point. At this point now, I'm not interested in those stocks because they have already moved up too much. If I'm a day trader or short term, I think this actually presents some good opportunities for you. Now, this is just IBD's articles. You could look at, I didn't look at Jim Cramer's stuff. I refuse to watch his show or listen to him at all because I just can't stand it. But you can actually go to, I think there's a website, if you go to like Jim Cramer's or Mad Money Summary or something like that, it'll show you all the things he's talked about, and you can do pretty much the same thing. Because of the sheer volume of people that watch Jim Cramer, and make your opinions about whatever those types of people are, because of the sheer volume of people that watch it, when he says, buy Dover Corp, it's going to gap up the next day. It's almost, I don't know the percentages. I wish I did, had the statistics on it, but it's almost a given that it's going to gap up. And I think I told you years ago, there were some college kids that ran a report, or wrote a report on every time he did his fast money round, whatever he said buy on, it jumped by X percentage. And the number that stood out was like after 8 or 12 trading sessions, it gives back 100% of the gain. So basically, Cramer will create that pop because of his status in media. People follow it, the sheep will buy it, jumps it up, and then it just drifts right back down because nothing has changed about that company at all except Jim Cramer's opinion that you should be buying it or selling it. NJ, thank you, man. Appreciate that. You've been a regular contributor to the show. I thank you. I really do appreciate that. Shorting this market is very dangerous, at least as a swing trader. Agreed. It is dangerous, and this is one of the reasons that if I am shorting, I'm generally doing it with puts because I have defined risk, and usually the put options are a bit cheaper than buying shorting outright. Let's see. I don't know if it was necessarily obvious, Brandon, but it was certainly high probability. Brandon says it was obvious Monday we were going higher. I don't know if I would say it was necessarily obvious, but a lot of these things came right back down in demand zones. It was funny because on Monday I was actually selling puts on the Russell to buy it back lower, but then also looking to buy the move up if there was a bounce. And the next day, the Russell was a great opportunity. You end up with 32 points on the Russell in one trade. That basically makes your day. So, yeah, I think that there was a higher probability we were going to bounce yesterday. It's just, you can never put all your eggs in that basket and say it has to or it's going to. Welcome, Pei Lun Chong. Good to have you with us. If you are new, hit that subscribe button, then you'll know when these videos are released. Mr. Pumpadum, Cramerites are hopeless. Well, it's funny you say that because I look at them as a necessary evil. And congratulations to the Milwaukee Bucks for winning the NBA championships last night, but think of it like a team. And I know it sounds weird to say that you and we are actually, everybody in the financial markets is technically on your same team. I know you're thinking, well, JP Morgan and Goldman Sachs, those guys are against me, right? No, they're all on the same team. They're just trying to make money. So my thinking is, and this is the way I rationalize it, is on a team like the Milwaukee Bucks, you know who's got the strong suits. And when you're playing competition, you really spend a lot of time identifying the opponent's strengths and weaknesses, right? The Suns weren't very good in the paint. So where did the Milwaukee Bucks go? They went for the paint, really kind of the short jumper game. Okay, for us, if I know that part of my team are these people that will just buy whatever somebody says, then that creates opportunity for me, does it not? I mean, if you really wanted to be tortured listening to Jim Cramer every day, which he's entertaining, and I get it, some people love him, that's fine. You could simply watch that show, make a list of what he's pumping up, and then wait for it to gap up the next morning. And don't short it right away. It could run up for a day or two. Just wait, and when that thing starts to turn, okay, now I'll go short. Maybe you buy some puts on those equities just to be a little bit, defined risk with your premium that you paid. But I would argue that that's opportunity. While they may be hopeless, it creates hope for us because if you know the weaknesses on your team or how other opponents are specifically playing the game, then they become opportunity for you as well. And I think the Jim Cramer crowd is a pretty easy target. Personally, I think you can make a full-time job doing it. Just identifying what he does, pumps it up, sell it off short. You'll be doing a lot of shorting, so be careful. All right, another Malaysian. Oh, did Katut bring you in, Pay? I know you with this. Let's see. Thinking of shorting all Cramer's calls. Okay, so I actually, for a while, I built an inverse Cramer portfolio just for fun. And every one of those positions was making money for a while. And then, of course, when you're in this big of a bull market, eventually something's going to catch up with you. But I look at it as Jim Cramer is most likely being influenced by other people. Now, one of the challenges I have with this show is I'm live, right? So when you guys throw something out there and you're like, hey, can you check out PTC? I'm going to be honest with you. I don't know what PTC does. I can just look at the price charts. Here's one way that you can tell that Cramer's show is fake in a lot of these TV pundits. There isn't a ticker symbol that's ever come across his screen or that he's mentioned that he hasn't known everything about, right? It's a scripted show to begin with, right? They know exactly what's going to be talked about. They know how they're going to approach it. They know the sound effect buttons to press and when. They know the calls. They know the questions the caller's going to be answering. So, right now when I say, hey, send me questions, and Brendan's like, hey, tell me how Ethereum is in relationship to Ripple. Jim Cramer's not going to know that. I do, right? So there's certain things that he's not going to know. There's no way he can know all this stuff. So remember, scripted media. So the article that came from Scott today, and this isn't, by the way, just in the United States, guys. I know we've got a couple people here from Indonesia. You have the same problem, right? When you look at your financial news, there is going to be some degree of manipulation, some incentive for the person who wrote that article, whether it's for Bloomberg, Financial Times, Wall Street Journal, Yahoo Finance, it doesn't matter. There is some aspect of sensationalism there where they want to get headline views on that article. And they'll say things in there that may not exactly be true. And if you ask where their sources are from, they'll say, well, we don't cite our sources because they're getting them from random people who are probably feeding them a bunch of garbage. Reality TV at its best. Yeah, but remember, Lisa, reality TV is not reality TV. Reality TV is totally scripted. If you really want to have a good show, Survivor, what a joke, right? You don't just vote someone off an island. If you want to make a real show, you call it Survivor, and you throw these people on an island, and you say, okay, you can have three things. You want a match, a pot and a pan, a hatchet, or something like that. And you say, now you survive. The risk is someone on that show is going to die. That is reality TV. You're not gonna throw everybody on an island and everyone's gonna make it. Pretty soon you're like, hey, what happened to Kevin? Oh, Kevin disappeared, but man, am I full. Yeah, that's reality TV for you. Okay, so as far as Scott's original question, which was, what's your thoughts on buying these companies? I think we covered that one, right? It's never just buy them because anybody says, even if I were to say, hey, you should be buying these companies, which I generally don't, I would say I might buy these companies. I'm not encouraging you guys to buy anything. You need to make your own opinions. But anytime someone tells you, hey, buy this or sell that, always look at the price chart and say, should I buy it right here? Am I being manipulated? Am I being influenced by this person who maybe I hold in high regard, or maybe somebody recommended to me, or maybe he just claims they made a lot of money? Do I need to be listening to that person? Don't listen to that person. Do your own due diligence, even if everything we talk about on this show as well. Go home and look at the price charts and make your own opinions, right? One of the things that I try to do, it's a little bit different, is I don't like to do what he who shall not be named out of Chicago does, which is just draw level after level after level after level after level, draw 100 levels, and then boast and brag about the one level that hit, and then pretend that you made a lot of money trading it. That's what this guy does. If you follow these two trades for tomorrow, these are going to happen tomorrow. They're either going to happen tomorrow or they're not, right? This Dover one, which I like, and then we also, the other one on there, I don't remember off the top of my head, but I believe was it O? Yeah. So Dover and O, I'll be watching those tomorrow, right? I'll be making trades on those if they come to my parameters of criteria. Some people, you're not going to like that. You're going to move on to something else. Great. Merlin shows like Saturday Night Live, and Cramer is the Jerry Springer show. That's good. I almost take offense to that. I almost take offense to that one, Jerry, because Saturday Night Live hasn't been funny for years. So there's a couple good episodes. After the cowbell episode, that was pretty much it. All right, so that's my thoughts on that one, Scott. I hope I answered your questions. Hopefully, you have a little bit of better understanding of media and what their goals and intentions are. Trading media recommendations to me are a fool's errand. They're always thinking about somebody, or always trying to manipulate you and get you to buy something that you might not want to buy, or maybe even shouldn't buy. And this is, again, as well, I'll stay out of Reddit chat rooms and things like that. I'd rather be minimally influenced by anybody and just make my own decisions, which is why I love using filters, right? Because when I run a filter like Bollinger Percent B, I'm looking for price meeting a criteria, not someone's opinion about it, not someone's manipulation of it or pontification of anything. It's just saying price is doing this, great. Because I'm not trading that what was his name? The guy from, I'm not trading Matt Krantz of Investors Business Daily. I am trading Dover or Realty Income or whatever ticker symbols those are, Teledyne, PTC. That's more important to me than trading someone's recommendation. Let's see. Scott says, what does a futures contract expire with a lot of outstanding paper in the market does to the price in the next couple of days? Well, it's going to be cash settled, so it doesn't really have an impact on it. Not in my opinion, right? It doesn't matter how many contracts are out there for a specific price. Remember, for every one of those things, you have a buyer on one side and you have a seller on the other. And since it's cash settled, that ultimately means that there's not going to be a delivery of S&P, so it's not going to have an impact. It'll just be cash settled and they'll roll into the next contract. So it doesn't really have any big impact on that one at all. Let's see. I don't know if I can, I'm not going to repeat that one, Brendan, but yes, there are some bag holders in the crypto space who have been pummeled lately. And if you saw today, you had some very bullish comments from Elon Musk. You also had some... I forget her name, from the ARK Fund. You know, she is backing crypto, and Michael Saylor. So you have three big hitters, you know, backing up crypto and putting a little floor underneath it. We'll see if that holds, because if you look at these price charts, I'm going to shift the conversation now. You look at these price charts, it's ugly. And if this was anything other than Bitcoin, I would tell you what. I'd say stay short. There you go. Thanks, Tom. Kathy Wood. I would say stay short. Why? Because it's lower highs, lower lows. We've bounced up right now to the 20-period moving average, but honestly, it does not look very good. Obviously, I'm bullish. I want cryptos to move up because I have a sizable position in it, but it's not really looking that great right now. 30,000 would be a logical floor. Hopefully, it holds. Kathy William. Hopefully, it holds. But, you know, if this was any other symbol, I'd say, hey, you pulled back into the 20-period moving average. Probably a good shorting opportunity here. It's a little bit different with the way cryptos work, simply because of the supply and demand factors, and the way that the acceptance is growing with regards to cryptocurrencies, but still rather negative out there. Yes, Scott, it can have an impact on the deliverables of something that is, on futures that are deliverable, although I don't pay too much attention to that. Not really my area of expertise. So sorry, I won't be able to get more in depth on that one. I have reached out to Don Dawson a dozen times, who he would be the expert on that and tell you everything you need to know. He's my number one guy in the futures market for deliverable commodities and things like that. But he just hasn't. I think he's just fallen off the radar. Who knows? Maybe he's a COVID victim. I hope not. He's a good guy, and hopefully I can get him on the show here in the near future. But let's see what else. What other questions you guys have more? Shiba Shillers all over YouTube. When Lambo is a very overused expression. I know. Isn't that ridiculous? When Lambo. It's like, no, how about I invest in something that's a good product? You buy Shiba Inu, you know, shame on you. You're kind of a fool for buying Shiba Inu. You're buying something that really has no use case scenarios. It's a pump and dump thing. Great. Hopefully you made some money on it, but you got to get out of that. I mean, do you really think that Shiba Inu is going to have any sort of long-term viability when you compare it against teams that have huge development, Polkadot, Cardano, Ethereum? You know, there's so many great products out there in the crypto space that are worthy of investing in, but you got to do your due diligence. You know, one thing I always talk about is going to GitHub. If you go to GitHub, you will see the amount of commits, really kind of a lot of the coding aspect to it. And since it's open source, GitHub is one of the number one places for people to go and work on these projects. You look at Ethereum, you know, you got millions of lines of code and thousands of people working on it. You look at something like Shiba Inu, you've got probably under 100 people working on it. It's a big difference in development and team associated with those specific projects. Do I have a date for the crypto class? Yeah, the The first two, so there's going to be two portions to it. There's going to be a free kind of high-level overview, which most of you guys at this point, if you watch the show, you'll know that. That's going to be a free piece, and then there is a paid piece after that that's all going to be on demand. And then I'm going to be doing probably, I believe the timing is going to be about 4 hours a week of just live crypto analysis, trading, investing, moving, shuffling, transferring, all that type of stuff. We're talking liquidity pools, yield farming. I'm talking staking, different rates like that, and how to pick airdrops that are coming. There's just so much to do. Hopefully we can get it all done in 4 hours a week. Which apps to download to study better radar? What do you mean by radar, Pay? Let me know what you mean by radar. What does Malaysian usually use the apps to trade? Oh, that I don't know. You'd have to talk to Katut. Unfortunately, I don't know what you guys are using down there in Malaysia with regards to trading platforms, etc. Haven't been down there in quite some time. Last time I was in Indonesia, I was in Singapore. I wasn't even Singapore, it was Malaysia. I was in Singapore. Loved it down there. What a great place. Do I use the block? I do not use the block. Do I use into the block? No. I'm not even sure I know what that is, but so I think Brennan should actually be part of the teachers for our crypto course, right? He's just he knows tons of stuff. Oh, the analytics platform. Okay, I thought it was a block is talking about a specific crypto. No, but I'll probably use. I have a couple of variety of sites I'll be using for that analysis. Yeah. Well, hey, if you think about it, Walter, you get 4 hours a week, specifically crypto, but if you really think about it, you're getting 5 hours a week of me for free. So I'm pretty sure OTA might have an issue with that going forward. We'll just have to see how it all transpires. But right now, I'm still going to keep doing this show as much as possible, but my plate is filling up very quickly. All right, what else do we have? So media recommendations, again, it's not just media. Even if your next door neighbor is telling you to buy something, you should always be careful and not jump into anything. Do your analysis. I don't care how prominent that person is or what you think of that person, how great they are. Unless you're seeing their actual trading statements 100% truthfully, which will never happen. It will never, ever happen. Then you shouldn't trust them. Yeah, that's what I'm saying. What I mean by that is, what a lot of people will do, especially if they, are trying to get you to sign up for something, is they'll have 5 accounts, 10 accounts, 20 accounts in different assets, and they'll show you the one that they'll go take flyers on them, right? Flyers meaning taking big chances so they can post great rates of return, and they'll do the opposite in another account. So all of a sudden one account shows that they're up, 300%, while the other account lost everything. And then they'll show you the up 300% account and be like, see, I'm so great. Look at me. I'm amazing. So no one will ever show you full transparency, truthfulness, unless the FTC has looked at your trading statements and said that you don't make any money. Then that I would trust because they're pulling your accounts through subpoenas. But we won't talk about that. Don't want to talk to you about. Do you have any preferred sites where you're doing your stock analysis, or simply stick with chart analysis, Kenny? For me, it's really just the price chart. And you think about the beauty of it. In reading that article that was kind of the basis, and thank you, Scott, for sending that in. When I read this article from Investors Business Daily, buy the dips. Investors pile into these 6 stocks for fast gains. And it's like the first sentence there. S&P 500 investors are bravely buying the dips, following the sell-off like never before. And they're showing some of their favorite stocks to scoop up. This immediately, I don't care how much you can cut it out, immediately makes you go, ooh, they're gobbling these stocks up. I should look at them. And right away, that hook has been planted because you're going to pull those charts up and you're going to look at them and go, holy cow, these things are doing great, right? You're looking at all-time highs for some of these. Like Dover, you look at this and go, oh, I got to buy this. That right away, that outside noise has influenced you to do something that you would not normally do and you probably shouldn't do. So when I just look at the price charts and forget about any ticker symbols or what people are saying about them, this speaks to me. Clearly something happened here on Tuesday morning. Now, I'm assuming that there's news that's outside of what we experienced, which was just markets coming into a demand zone and bouncing, which was, as Brendan says, somewhat predictable. Yes, the odds were definitely better. They were going to bounce yesterday. Today, yeah, follow through probably. Now, tomorrow, that story may change, right? Look at the S&P 500. Here's your ES. Now, where are we coming into? You're coming right into overhead supply on the ES. You're coming into all-time highs yet again. Not that it's going to stop it, but just the probability. If I had one of those little meters, like a gauge that kind of had the arm, the Smokey the Bear fire meter, right? If it's a reversal meter or a stopping trajectory meter. Sorry, Clint. I got a Great Dane now. He's a big boy. One day I'll show you guys Clint, but he likes to bark. If I had that meter, it would be telling me that right now, if I'm looking at a reversal, it's more likely to happen here because I'm coming right into highs. And the odds are better that it's going to slow down and stop. So if I'm playing that big rally, I don't want to jump on it right now. I'm waiting. That's just the nature of price charts. So anyway. All right, let's see. Is Sam DeMort gone? No, but it's funny. You look at a lot of his partners, and I mean, he's had to change his company name multiple times, and his partners are leaving him left and right. So it just speaks volumes as to that individual. But good for him. Good for him. Whatever. I hope he goes and does whatever he wants to do. This trend is unstoppable because of the Fed. We haven't even done yield curve control yet. We've done slightly controlled yield curve stuff, but yeah, it's really the Fed is the main piece here. But keep in mind, I really don't think we're out of the woods with inflation. And at a certain point, there's not much that the Fed can do. You can't keep easing and adding stimulus to the markets if inflation starts to get real high. Now, of course, we'll have to wait every month. We'll wait. Let's see. Clint, come here. There you guys go. There's the big Clinty. Oh, there's mine as well. Get out of that bag. There you go. You just got the sneak peek, the behind the scenes. Yeah, we've got Clint's 130 something and my Shepherd's 110. So yeah. All right, let me go into economic calendar and announcements for tomorrow. I'll wrap this stuff up. Here's what happened today. I certainly want to talk about earnings. There is your earnings. Verizon Communications came out today. Johnson & Johnson, Coca-Cola, Kinder Morgan, everybody here, not only did they beat earnings, but there were some pretty significant beats. You guys can see pretty big numbers across the board. So great earnings announcements, although not everybody was up. You see Texas Instruments, they beat earnings handily, and they were down 4%. Kinder Morgan, they beat earnings by 21%. And they're down almost 1%. So really kind of tricky to play those earnings, which of course is why I stay away from them. Now, that's what happened today. Here's what's happening tomorrow. AT&T, Intel, Twitter, Snapchat, Blackstone, Abbott Laboratories, and American Airlines. We have more airlines coming out this week. So it'll be exciting, especially if you look at what happened with Jets. We talked about that the other day. Jets, it was my Monday morning must-know trade. I don't know if you guys saw that. Here's Jets, Jets. We talked about this on the Monday morning must-knows on how Jets was coming into an area of demand. It's like, look, yeah, you could take a chance right around $21. It's already at $23.36. So a nice pop there on Jets. I did not take the trade myself. Didn't make the trade myself. And then here's what we have for economic announcements for tomorrow. By the way, crude oil inventories, we came out at a pretty big surplus of oil today, which is surprising given the fact that oil was up like 4.5% today. Here is your economic announcements for tomorrow. You can see the European Union, they have their main refinance rate. That's going to be at 4:45 in the morning, so way before we even wake up, or many of us wake up. Other than that, you've got consumer confidence for the euro. That's 30 minutes into the trading session. And then you have existing home sales, natural gas storage for the U.S. Those are your kind of two big ones, as well as unemployment claims. Now, of those three announcements, unemployment claims happen before the market opens by 1 hour. And number two, the existing home and CB leading index numbers come out 30 minutes into the trading session. So that's your major stuff for tomorrow. British pound has retail sales, but that's going to be late tomorrow night. All right, that's going to do it for me for today. Again, welcome our new followers. So, Peg, good to have you with us. Again, hit that subscribe button for anybody who is new. If you have comments, suggestions for tomorrow's show, again, Scott, thank you for that article. It actually helps steer today's conversation. If you have something you want me to cover for tomorrow, or interesting articles, pictures, even me, I could probably do shows about memes if you really wanted to. Send those on in at TraderMerlin@gmail.com. That's the easiest way to send things to me, or comment down below the YouTube video. That helps as well. If you enjoyed today's show, learned something, give me a thumbs up. If not, well, email me and let me know what I can do to help. That's going to do it for me for today, everybody. Have a fantastic evening, and I will see you on Thursday. Take care.